case, what is 1 out of infinite equal? That's actually 0. How would you know? So what I argue is that when we're just cherry picking 1 or 2 or fill in the blank fundamentals, we actually don't know what percentage of the total market that actually is. The only way that we can look at the sum of the market is the one place where every single participant, whether it's someone looking to get out of dollars because they fear unfunded liabilities, let's say, or let's say it's someone looking to get into US dollars. Why? Because maybe their currency is worse. Maybe they're in Argentina and they're trying to protect themselves, so they buy US dollars. And I'll tell you this, I have cousins in Argentina. I've been down there to visit. And you ask them, well, what are you doing? They're in the midst of a quasi-hyperinflationary type of event right now. Most people, to protect themselves, they buy US dollars. They don't buy gold. I'm not saying I agree with that. Do you understand what I'm saying? I'm saying that's what people do. So the logic behind this is we should pay attention to what people actually do, not just what we think they should do. Okay, anyway, let's look at it. So here's the dollar. And by the way, this is an important data point down here, 2008, this low at the 72 level on the dollar index. Again, so this level was the all-time low, all-time in the history of freely traded currencies. This was the low. So I'm not cherry picking, just the last 12 years here for no reason. This was the all-time low. So when I'm trying to evaluate this market, and are there any potentials for a crash in this market, what I like to do is start with the most obvious things that we can consider. Here's the key. Everything's going to have a reason. The first thing that I usually like to look at is obvious support and resistance levels. Okay? Now, look at this one. How, for example, here in 2008, from the low, when Bear Stearns and Lehman Brothers were going bankrupt, this was the all-time low. Notice that this first surge here was rejected right at the 88 level. Rejected at 89, rejected at 88.5. When we have 3 points like this in a row, all matching up, this is telling us that there are some serious sellers over here. And so we have a resistance zone. And so notice how the market backed away for a couple of years here. And then finally in 2014, once it had gathered up enough energy, there were finally sufficient buyers. And these sellers back here from 2008, 2010, they were finally exhausted here in 2014, right? So the market finally breaks higher. And notice how when it weakened over the course of 2017 and into early 2018 here, notice how this same level matching up here with these former peaks served as support, right? We saw buyers come in here. So this is this phenomenon that you will see over and over and over again. And I know there are some of you that want to learn this type of work, this type of analysis, because you want to apply it, let's say, to other markets that you're interested in, other commodities, your own portfolio, let's say. This is a critical point, a critical lesson in how markets behave throughout time. There is a bias that when we see a significant multi-year resistance zone broken, that same level will then act as support. So that's what we're seeing here. And there are fundamental reasons for that, by the way. I could get into that another time. Suffice it to say that it works, and then we can discuss some of those fundamentals maybe in another lesson, another day. Let's look at another area of resistance here. Notice this zone around 100.5. So rejected, broke through here, right, and started to just falter, right? Notice very different from here where we broke through and just surged. This was a break and then falter and failed. This is what we call a false breakout. You can see false breakouts in most markets. It's when a level is exceeded, but then the market, a new group of sellers are showing up. Market came back down, found support at the former resistance zone as we talked about. Here we are now. Now let's look at the next really important thing, which is where are sellers showing up, not just horizontally, but in a trend. So when we can match 1, 2, 3 major highs in a row, clearly we see a trend of sellers showing up here. Let's see, are there any trends of buyers? We have this one from 2008 to 2011. Notice that. But this doesn't really help us very much right now. It's also not my favorite trend of buyers here on the lower side because we are missing this 2009 data point right down here. So, this trend doesn't help us because here we are all the way up here in the 90s. This trend is all the way down here in the 70s. That doesn't help us. Was there anything else? Yes. Look at this. Look at how this matches up very nicely. So from this low here, we start coming into the major lows in 2014. This major low in 2017, notice how this rising trend matched with the broken resistance turned support, right? It matched, and for those of you who are really paying attention right now, look what else matched. It's a little hidden up here, but that's the 50% Fibonacci retracement level of this entire surge. The 50% came right there. So we had 3 very important support levels all matching within about a point of each other. Clear rising trend here of buyers, clear rising trend of sellers. Look at how this forms just a very nice, this magenta, this parallel channel. So in sum, what can we call this? This is a multi-decade rising trend. This is the situation that the dollar is in. If you want to talk about big picture for the US dollar, we are in a multi-decade rising trend until proven otherwise. Let's see what we can talk about over the short term a little bit more. Look at this where we are now. There's something of an embedded, right, for the last 18 months or so, an embedded little channel here. I'm labeling this in blue. This is blue for primary trends. Primary here in blue. Typically by the word primary, I'm talking about functionally important for the intermediate term. What are we talking about day to day, week to week? It's this primary rising trend, which right now exists between roughly 97 and 99.5 on the dollar index. So we're in a primary rising trend within a longer term rising trend. We can show some of the broken trends that we've seen here over the last couple of years. Sometimes these are relevant. For example, notice the trend here from this low connecting a lot of these lows right here. And notice how what happens, so when these trends break, notice how it was really the breaking of this trend, which just then, boom, the dollar had this mini waterfall, almost the beginning of a collapse, right when we saw that trend break. So trend breaks tend to be very important things to look for. Notice one other, then this downtrend from the recent high here. Notice the downtrend connecting a lot of these peaks. Peaks don't have to connect exactly. We're looking for a trend. Notice how when this trend, the downtrend was broken, boom, surge higher. So if you look for these trends and look to see where are the points that trends are breaking, you can see where the market is going to have the possibility of kind of one of these impulsive types of moves, higher or lower. So here's the real big picture of where we are in the dollar here for the last 15 or so years. There is no evidence at this point of any collapse setting up in the dollar. The dollar is in a multi-decade rising trend. We might not agree with that, but what this is telling us is that the dollar, for all things considered, we have very strong support here on the lower side, which right now would come in at this 93 level. There's even an embedded rising trend of support here. There's nothing to indicate that the dollar, despite what's going on with all those fundamentals that we already talked about, despite what Trump is doing, despite what China is doing, despite weakness or not in the euro versus the dollar is in a long-term rising trend until proven otherwise. This is very basic, but it's very powerful. You'll see some people give all sorts of exotic forms of analysis on the dollar, and I'm telling you, it's not any more valuable than looking at where the major trends are. What is the dollar actually doing? What are the points where I would say we have the possibility, the potential is now shifted into the favor that there could be let's say, a dollar crash or some sort of a meltdown over time in the dollar. The first thing that I would be looking for is this embedded primary rising channel, which right now comes in at the 97 level. For reference, the dollar closed at 98.17. So only about 1.2 points below where we are now. If we break this rising trend here, you can see that the market is clearly losing some support. And then this market could begin to move down toward the bottom end of the red arrow. And then what would the really big point be, however? It would be this, the long-term, multi-decade lower boundary, always the lower boundary. The lower boundary is the one showing us where are the buyers coming in. The upper boundary is where are the sellers coming in. But for the knowledge of when is the potential that this market could, let's say, kind of grind its way back up here and let's say, roll over. When could we see, for example, another move like this, 103 down to 88? Let's call that a 15-point move, right? When could we see maybe not a 15-point move, maybe a 30-point move, maybe twice that? Maybe when could the dollar have the potential of making a new all-time low? By definition, we have to see the buyers that keep stepping in here at higher and higher levels. We have to see them exhaust themselves. And we will know that is the case when we see this lower boundary of buying support break. Right now, that comes in at 93. That would be the major data point that I would be looking at that tells me that the dollar has some possibility of fulfilling all these hyperbole-type projections that are given so often that a dollar collapse is coming, therefore buy gold, therefore buy canned goods because the U.S. is going bankrupt. It's a bunch of baloney until we see it in the market itself. That's the takeaway on the U.S. dollar. That's where we are. Now, this is an even bigger question, if you ask me. Does the dollar, we've just looked at the fact that the dollar is not in anything resembling a decline or a falling trend, but does that actually matter for gold? Can gold perform well even if the dollar keeps rising, or if the dollar is, let's just say, stable for the next 3 to 5 to 10 years? Well, let's take a look at this again. What we're looking at here is the dollar. By the way, we were just looking at this. I mentioned from the all-time low to the present, we were just looking at this right here. And now we are looking at the dollar with gold right up against it on the bottom here. This is in the freely traded gold era after Americans were allowed to own gold in 1975, after it was no longer illegal to do so and they could not throw you in a cage for owning real sound money, which was the case before 1975, at least on the official law books. So to do this form of analysis, here's what we're going to do. I've drawn this line. So here we are. We talked about this. We're just below 100, 98 and change on the dollar index, right, today. 98 and change. So what I've done is for the last 45 years, we've drawn back here all the other times throughout history that the dollar index has been at the same level, okay, the same 98 level. And you can see, so the dollar has had these huge gyrations over the last 45 years, higher, lower, and now it looks like it's moving higher again, right? But as a net sum, we can actually see that the dollar has basically done nothing in the freely traded era. A lot of wild swings, all for nothing, right? So the point, what we're going to do now is look at what prices gold has traded at when the dollar has been at this 98 level. Okay, so just recently, just a couple of weeks ago, gold was trading at 1,500 when the dollar was at 98. You can see that right here. Let's go back and look at late 2015. The dollar was also trading at 98, but gold was trading at 1,045, the low from December 2015. This is interesting. Let's look at a couple other periods here. 2003, after the NASDAQ bubble burst, the dollar was also